Greetings, everyone. This is Richard Krivo with our chart drill down for October 20th, 2015. Now, if you have any questions about any of the indicators that I use on my charts or why they're set up the way they are, please refer to the May 11th YouTube video. It's entitled Chart Tutorial, and that'll give you a good explanation. And if you still have questions on that or anything else regarding this particular session or trading in general, feel free to email me at RKrivoFX@gmail.com with any and all questions. And if you're not following me on Twitter, you can follow me on Twitter with the handle at RKrivoFX. Now remember, these charting drill downs that I do, they're designed to identify higher probability trading pairs. Any of the setups by no means should be taken as an indication that they will ultimately turn into a winning trade. Probabilities mean just that. Maybe yes, maybe no. And trading is all about probabilities. What we want to do is identify a trading edge that provides us with a higher probability trading opportunity. And the more of those higher probability opportunities we identify, the more pairs that are associated that way, the greater the likelihood will be that we will be profitable in our trading at the end of a week, a month, a quarter, or a year. We're going to have winning trades. We're going to have losing trades. But by identifying the higher probability trades, we're going to get into the pairs that are more likely to succeed. And by using money management and letting our winners run and cutting our losers short based on our Dodge channel strategy, there's a greater likelihood that we will be making money over that course of time. Now, with that, let's go over the disclaimers. And trading at foreign exchange involves significant levels of risk. Traders, you should only be trading with risk capital, and that can be defined as money that you can afford to lose. The high degree of leverage can work against you as well as for you, and the content that I provide here is for informational and educational purposes only. Okay, now with that, let's take a look at the charts. Now, as you may recall, I use a strong weak currency analysis to point me in the direction of the pairs that are in stronger trends. And should you want to know anything more about that, again, email me at RKrivoFX@gmail.com. Now, the most recent strong weak analysis that I did was probably about 30 minutes ago, and it indicated that the New Zealand dollar was the strongest currency and the US dollar was the weakest. And that was the same as when we did this last time. Currency pairs, depending on the time frames that you use to do that strong weak analysis, can change positions in a relatively short period of time if you're using a shorter time frame, or they can stay pretty much in place if you're using a longer period of time. What I use for the strong weak analysis is a 4-hour chart with a 200 period moving average. Want to know more? You know the email address. Feel free. Now, what I do is once I do that currency analysis, that strong weak analysis, I go then to the chart that shows me the strongest currency versus the weakest currency. So that was New Zealand US dollar. So the first pair I'm going to take a peek at here is going to be, you guessed it, the New Zealand US dollar. As soon as I find it, I know it's, there it is, okay. There it is. So we've got a weekly, a daily, a 4-hour, and a 1-hour chart. And as we talked about for the last couple weeks, there are some pairs that are starting to show some movement on the trending movement on the daily chart, but the weekly chart hasn't quite gotten into sync yet. And that's why many of you are sending me questions or asking about, well, why aren't the markets trending right now? Or am I crazy because I don't see any trades setting up on the charts? No, there's some pairs that are providing some trades. There's a good majority of the pairs that are not at this point, again, depending on your trading style. Shorter term time frame traders, scalpers, for example, 5-minute chart, 15-minute chart, you're going to see trades more often. Traders who are using, like we are here, a daily chart, a 4-hour chart, and a 1-hour chart aren't going to see setups as often as traders who are using a 1-minute, a 5-minute, a 15-minute chart. And there's absolutely nothing wrong with that. It's just a different way, if you will, of doing business. And that's what it's all about. So on the New Zealand US dollar, we can see here on the the daily chart, we've been making higher highs, higher lows. Price action continues to take out that upper Donchian channel, but as we look at the weekly chart, a longer time frame, we see it's taken out the lower channel and it's making higher highs and higher lows, but it has not taken out the upper Donchian channel yet. So if you're trading strict Donchian strategy, which is what I personally like to do, the weekly chart is still in an open sell scenario, while the daily chart is in an open buy scenario. What I like that what I see here that seems to be setting up is on the slow stochastics, angle and separation to the upside, pretty good angle, not super strong, but great, kind of pointing to the 2 o'clock position there, if we're looking at that as a clock phase. And so we've got open angle and separation to the upside, indicating that the move to the upside on the weekly chart on this pair is likely to continue, not guaranteed, likely. And we already have on slow stochastics on the daily chart, we have it above 80, which indicates that it's reflecting the momentum to the upside that we've had here for the last several days, last couple of weeks, likely. If we go to the 4-hour chart, this is really nice. This is a nice, relatively smooth stair-step chart to the upside. And we've got price action here is above the 200 period moving average. Price action here was above the 200 period moving average. And now on the 1-hour chart, it's flirting with moving above. What I would be looking for on this particular pair would be, let's see, the upper Donchian channel is at 68.47, about 100 pips from where the pair is trading right now. But we've got some resistance here. So in that case, I'd probably set a price alarm around that upper Donchian channel, which would be around 68.98. And then if and when that price alarm goes off, because we do have an uptrend on the daily chart and a potential longer term uptrend showing on the weekly chart. So I would take a look if the price alarm hits at about 68.90, 68.95, 96, 98. 6,900 around in there, set that price alarm, and then look at the charts and see, is the New Zealand dollar strong across the board when that alarm went off? Is the US dollar weak across the board when that alarm went off? If that's the case, we've got a higher probability scenario for a trade that's got a greater probability, greater likelihood of success. Now, as I look at the, hang on one second here. As I look at that strong weak analysis, as I said, the New Zealand dollar was the strongest, US dollar was the weakest. I then go down using the New Zealand dollar again as my base, strongest currency. I then go to the second weakest currency, which in this case is the Japanese yen. And I bring up the chart for the New Zealand dollar, Japanese yen, and see what we have there. Here we've got a similar scenario. Price action on the daily chart since the 2nd of this month, 2nd of October, has been taking out that upper channel with regularity. Touched the lower channel there, then took out the upper channel, and has continued to do that, and is approaching the 200 period moving average. Price action on our weekly chart is closed above the 200 period moving average, but again, we see a situation where we're in an open sell scenario based on the Donchian channel strategy on the weekly chart, and an open buy scenario on the daily chart. We've got a similar look to the candlesticks. We've got a similar look to stochastics because we've got the New Zealand dollar in there, and there's going to be some similarity there because we're looking at another family member, if you will, of that New Zealand dollar. So open angle and separation to the upside, indicating greater potential to follow through. What I notice on this weekly chart, right in through here, between 83.20, this is on the weekly chart again, so there's going to be about 300 pips in here, 83.20 and about 80.34. Right in this vicinity, there's a fair amount of resistance. Now, if price action breaks above that level and closes above that wick right there at about, excuse me, 83.09, it's got a pretty good run potentially to the upside. Again, because it's got room to run doesn't mean it's going to, but I don't see any dramatic obstacles in the form of resistance in its way after about that upper wick right there, which is exactly at roughly 83.30, right in that area. And so I'd be looking for here we tested the lower channel, and we've got 81.86, and we've got roughly 82.01, call it 8200 even, right in there. So again, I would place a price alarm at about 8,200, 82.00 on this New Zealand yen pair. And once that price alarm hits, I come back, I do the same thing again. New Zealand dollar strong across the board, Japanese yen weak across the board. Okay, that's a recipe for greater likelihood, again, of having a successful trade. Nothing's guaranteed in trading. You likely know that already. Okay, New Zealand yen. Let's look at the New Zealand dollar for the base again, and let's look at the Euro New Zealand currency pair. And the Euro is the third weakest currency that's out there. There it is. And the New Zealand dollar, as we said, is the strongest. So this pair is going to be moving. We're looking here at, we've got on the daily chart, we're in an open sell scenario. On the weekly chart, we're still in an open buy scenario. But notice from previous weeks, every week, price action, not this week so far, but price action is getting lower. It's going down. Price action is moving down, closing in on that 200 period moving average, closing in on the lower Donchian channel. So at some point, if this continues, and that's a big if this continues, we will see the weekly chart be in sync with the daily chart. The daily will be moving to the downside in an open sell, and the weekly will be moving to the downside in an open sell. At this point, again, we've got some support, in this case, right in this area here. But if and when price action closes below where the 200 period moving average is right now, we can see that, which is right lined up with that wick. That's what I was looking for. It's got the potential to drop on the weekly chart with little or no support on that weekly chart, about 850 to 900 pips. Again, it's not a guaranteed scenario, but we don't see any roadblocks in the way on that weekly chart. So if I was looking at this pair, let's see, if I was very aggressive trader, let's bring up that 1 hour chart. See how price action has been consolidating right in through here in this area. And if I was a very aggressive trader, what I could look at is the bottom of this wick right there is at about, let's see, and I realize you can't see the right-hand side of the chart the way things are set up, but 1.6776, and if price action breaks below that, it has a potential of dropping to the next support level, which is roughly about 100 pips in that vicinity. The advantage of doing something this way, there's an advantage and a disadvantage, like there is in a lot of things with trading. The advantage is that I would get in sooner into the trade and be able to capture perhaps 100 pips with roughly about a 60 pip stop. So the risk reward ratio, while not 2 to 1, is pretty close. So I've got the potential of earning about 100 pips with about a 70 pip stop. So I could earn 100 with a risk of about 65 or 70, right around in that area. Now, that's fine for a risk reward ratio. But one thing you want to know is when you get into a trade earlier, and this would be earlier than the Donchian channel strategy, when you get in sooner, there is the potential of getting stopped out more quickly because your stop is closer to where your entry is. So while you're getting in with a more favorable risk reward ratio, you're also running the risk of getting stopped out sooner. Okay, that's about all the time we have today for the pairs to go through. But what I want to do is just give you a feeling for how I go about drilling down the charts, the types of things that I'm looking for as I go through them. Hope this has been helpful in that regard. And again, please feel free to email me questions on what's going on, how you're doing with your trading. A lot of you do it. Feel free to email me, rkrivofx@gmail.com. Thanks.